Ladies and gentlemen, good morning. We're delighted to welcome you to VIRŠI Investor Webinar. We will start with company's presentation and continue with a live Q&A session. To join the discussion, please submit your questions through the Q&A window below the presentation. The session is being recorded and will be available for rewatch shortly after the call. Let me now introduce you with our hosts. VIRŠI Chairman of the Management Board and the CEO Jānis Vība, and member of the Management Board and CFO Vita Čirjevska. Now let me hand over to Jānis and Vita.
Thank you, Eva. Good morning, everybody. Today we have a plan. We have a plan to take a look back at 2023 results and key events in our company, and also to maybe give you some insights in what are our future plans with regards to overall strategy. And as usual, I would suggest that we start with overall overview of what's happening in the energy market. So obviously we are dividing the energy market in three segments: so fuel, natural gas, and then electricity. With regards to fuel, the year 2023 was somewhat a bit more relaxing if compared to the 2022. We saw that there are some price fluctuations in the market as fuel price, oil price was actually fluctuating somewhere between 70 up to $95 per barrel. But if you look at the start of the year of 23, so we might remember that there was an embargo pushed for Russian oil and oil products in February to European markets. So what happened later is that basically Russian oil searched for alternative markets, and they actually managed to find such markets in in China, and also in India and other markets. Obviously, these new markets currently and also in 23 are purchasing Russian oil with some discounts, but still the fact is that this is a market which is still giving some notable revenue for Russian products. Then closer to mid-year, we saw that the oil price is starting to drop a bit, and the countries of exporting oil, primarily Saudi Arabia and Russia, agreed that they will be cutting their production in order to stabilize this price and maybe even to try to push it up. In a way, they succeeded, but maybe not so much as they wanted. And then obviously the year end came, and a lot of geopolitical tensions in Middle East. There is this Red Sea, as you may know. Red Sea is one of the, let's say, most important logistical routes for oil products. And because of these tensions, this road was becoming riskier. And obviously, because of that, then in turn, the price for oil products was slightly increasing. So that was overall 23, but again, it was maybe not so drastic in a way in terms of pricing as 22. With regards to natural gas, so what we are currently seeing is that the drop in price of natural gas is still happening. And actually, currently, the price for natural gas is already below 30 euros per megawatt, which means that we are already back to pre-COVID pricing levels. And the reasons for this drop are mostly two. So the first is that entering the winter season, there were huge already storage capacity reserved for natural gas, and everybody was basically ready for this coming heating season. That's one. And the second one is that we had also quite mild winter in Europe, which obviously had some impact on lower demand for natural gas, which in turn, of course, also had lower impact on this pricing increase. And one regional thing which we would like to remind is that there is this pipeline connecting Finland and Estonia. So there was what officially is called incident a few months ago, and we know that this pipeline is currently not working. Recent estimates are showing that it could start work by end of April, but this is just illustrates that, that basically this LNG flow from Finland currently is not able to make it to other Baltic countries, and this is somewhat a strategical risk with regards to this critical infrastructure which we have in this region. So that's natural gas, and then electricity. I guess what we can say is that again, quite stable and decreasing transport pricing. Prices currently around 100 euros per megawatt, and again this is mostly in line with drop also in natural gas, because a big share of electricity, as we know, is being produced from natural gas. But on top of that, we also see that, for example, in Latvia and also other Baltic countries, there is a significant increase in renewable energy production. For example, in Latvia, we have these solar power plants reservations in terms of power already some 5 times higher than in 22. Which means that basically the overall importance of this renewable energy is actually becoming more and more significant, and therefore is also helping to stabilize these prices, especially if there is a sun and wind at the same time in a particular day. So this is a very quick run through the energy, and we can maybe now go next to already our company specific events. So let us start by reminding what are our strategic goals. So we see that our strategic goals are basically mentioning number of stations. We also are willing to become one of top employers in Latvia. Also to be a leader in alternative fuels, to also diversify our business model, and then we have specific targets on EBITDA and also net profit. And what we will do today with Vita is that we will go through each of these goals and try to illustrate how have we succeeded in the reaching of these goals in this year, and also what is outlook for next year. So let's maybe start then with station network. So obviously a very big portion of capex is allocated into this segment. And in 23 we opened 3 new stations. 2 of them are in the smaller towns in Latvia, in Preļi, Krāslava, and another one is in Olaine. And 2 of these, which are in Preļi, Krāslava, are actually franchise stations, which is a good step for us, because in this region we were not yet present. On top of that, we also made quite significant investment in reconstruction of 3 stations of our existing network. 2 of them are in Riga. One is in a smaller town in Zīlāni. Those which are in Riga are important because in one of them we constructed a shop. Before there was not a shop, but only fuel products available. And then another one is also important because this is like a new road being built and now is finished, which is going besides our this station, and the transport flow has increased a lot. So we wanted to rebuild this station to meet the customer demands. And also important to know that at the end of last year, we had 3 stations in development phase. So one in Riga, one in Sigulda city, one in Salaspils city, and one which is in Riga is actually already, it's a good news. We already launched this week the operations of this station. And in Sigulda, Salaspils, the remaining 2 are expected to be opened by end of first half of this year. But this is only a beginning because based on our strategic goals, we need to reach 80 stations by end of 24 and 90 by end of 26. So there is a lot of projects currently either already approved or being approved, so that we can start expanding the network even more over next few months. And then also a very important point is that, as you may have heard, is that we have launched a plan to launch a station in Lithuania, which is a strategic project for us because a lot of our customers, especially obviously the B2B customers, are going through Lithuania to Europe. So we need one point where we can serve the demand for fuel for these customers. And we plan that this will be launched again in May, June. But the project is quite complex because it's not only about building the station, which we all understand, but it involves a lot of other activities like how to develop appropriate accounting system, IT system. There are a lot of legal items which we need to address. So we will all obviously do this because that's the first step in the Lithuanian market. So we need to make it properly, and then we can already start doing something on top of this one point in future months. Yep.
Yeah. So the second target relates to our employees, and we are finishing 2023 with employees in Latvia just below 800. With the existing situation in the labor market and with the inflation in the labor costs and accessibility of the labor, we understand that this is a focus for us, and we want to create value for our customers through our employees, and we want to become the best employer and obviously choice number one. But in this 2026 target, we have set up the aim to become top 10 employer in Latvia, according to CV Online survey for the employers. And this is obviously a short haul or sprint run in the first quarter of each year. But we want to create also value for our employees in the long term. And we see that we can work on this employer value through the base or the core of it. And in 2023, actually, this has been running like financially intensive because we have increased this payroll for the fuel station employees compared to 2022 two times. And actually, we also have reorganized the model for the compensation as such. And currently, we believe that we have the best offer in the market. And we also work more in engaging our employees and engaging with the market to understand what is the best offer, physical, environment-based, and also through the teamworks with our teams. We have revised our values of the company in smaller teams, and that helps us shape our culture of the company and also work towards our target in the long term with each and every employee in the company. And also we have the surveys for the employees 2 times a year, and for the external let's say employer score assessment once a year, to have really understanding on what exactly is required to our employees to let them feel better and let us become the best choice for our employees market. That's on the employees.
Yes, then let's move to the next target, which we have. So we want to be a leading player in terms of alternative fuel as an alternative fuel provider. So there is this complex world of decarbonization of transport. So we feel that we have this role in the local transport segment to offer customers with more sustainable types of fuel, not only the existing ones. And which is good is that we see that the demand for alternative fuels in Latvia is continuing to grow. Currently, we are already a leader in the market in terms of providing several options. So the first option is actually for the heavy trucks, which we are offering compressed natural gas. Currently, we are actually the only fuel trader in Latvia who is able to do that. And we see that this product is valued by logistic companies, also by bus companies, waste management companies, and others. And we see that demand for this product was actually increasing by more than 30%. And also the future perspective is quite good for this product, because we see that natural gas price has been stabilized or even still going down. So economically, it makes sense, and also from environmental perspective, it makes sense because it provides less CO2 emissions if you compare with diesel or other products. In terms of other segment, which is electric cars, this is still in early development in Latvia, because only less than 1% of market is consisting currently of electrical cars. But we are still providing future strategy for these segments, and already have in 2023 we have opened 14 charging points, high power charging points, offering at least 160 kilowatts for customers. And we also plan to continue expansion of these points at least until 20 stations until end of 24. And we are obviously doing this because we see high potential in the future for this segment, and also ability to cross-sell these customers with products from our shops. And then the important project, which is still under kind of R&D stage. There is no, let's say, specific investment made, but we are reaching a point which hopefully will allow us to start already build a biomethane production site in Latvia, with the aim to produce biomethane by year 25. So let's see how it goes. But currently, we are at least the plan is that we should sort out all finance and legal items to be able to build this production site and start producing biomethane already in 25.
Yeah.
Yeah, and then about diversification of the business. So again, we see where we were in 21 and where we are now. And we see that, for example, in 21, the huge share of gross profit was coming from fuel, and the shop products and other segments were lower than fuel. Now, when we look at 23, we see that there has been some shift. Not only the overall gross profit has increased quite significantly, but also the share of fuel products is actually decreasing. And this is mostly because other segments are growing faster than fuel segment. And we have a new leader in terms of gross profit, which is our shop or convenience store segment, which is already being the highest segment in terms of gross profit. Another thing which is important to note is that we have energy segment also doing very well. And over 3 years, the energy segment has managed to become a very critical and important business segment, already providing us with very tangible, let's say, financial numbers in our overall business model. So business diversification, in a way, you can see it is already happening.
Well, and to ensure that the company continues to grow, we have to ensure that there are stable cash flows. And actually, this has been a great year also for the EBITDA increase. We have grown by 11.7% from year 2023 to 2022. The strong base for this increase has been the growth for all business segments. And as Jānis mentioned already, the strongest amongst them has been the retail shops or convenience stores. That has grown by 4.3 million or 33% in gross margin, in a gross profit, and also in the margins as such. Also, very strong position has been for the energy segment that has grown actually just below 6 times. This is sort of for us still a young brother, and it's running like a startup, and we are happy about the results presented. And in respect to the fuel segment, Jānis will present news a bit later, how the dynamics has led to us to the result. But we must admit that this has been planned actually already in the budget, and these results compared to 2022 are a lot of effects from 2022 dynamics in the fuel market. And in 2023, we have been continuing to grow and increase our market share as such still. But this growth on the gross profit of 15% or almost 5 million is amortized by the cost increase. And the main thing that has increased from the year to year and is there to stay is the labor cost. And I have mentioned it already that in 2023, we were actually sort of pushed by the market and pushed by the labor to overview or compensation model in the fuel stations twice. One was in the 1st of January, second one in the 1st of July. But for the last part of the half of the year, we have a feeling that the offer is right now really focused and strong for our employees. But the net effect of this increase has given us 2.1 million in the sales costs, and that's there to stay. We have also been able to decrease our maintenance and maintenance costs. And in respect to energy and electricity in our stations, we have contracted let's say profitable or a good price contract that has led us to decrease in the costs of 700,000 in the 2023 compared to 2022. In respect to other income and expenses, where we see also an increase of almost 1.3 million, there are two main effects. One lies within 2022 where we had to cancel a couple of energy segment agreements, and we received the compensation on the agreement cancellation of almost 1 million or 900,000. And in 2023, we had a write-off of some costs or investments in the fuel stations that has been renewed, or the old station that has been removed and replaced with the new ones during the year according to our capex plan. And we see that this has been like a one-timer cost, but this investment and the transformation of the stations will give us profits in the longer term in other levels. And to the net profits, we have finished 2023 with the net profits of 5.1 million. And compared to the net profits in 2022, if the financial instruments value would be cancelled, would be in the same levels of 7.2 million euros. The main effect or change compared to 2022 is the financial instruments value, and this is the electricity instrument that we own in our balance sheet that has a positive value in its in the balance sheet of 2.1 million, and should be amortized over the next 4 years until the end of 2027. Currently, we see this change in the pricing and the effect to the profit and loss statement, which relates to the change in the electricity price in the market. The first price up, or the income in the 2022 was 3.1 million, and it related to the cost of electricity at the end of the 2022. But as Jānis presented in the beginning, during the 2023, electricity price has decreased and stabilized over the year. So right now it's just around 100, and in this value change in the price year to year gives us effect of 5.2 or almost 3 million euros, and is the main effect for the changes in the net profits year by year. We also experience the cost increase in the depreciation that is mainly related on the asset base, where we have more valuable the properties, and also we are opening up new stations, and this increase relates to our expansion. But we also experience increase due to Euribor increase during 2023, when until the beginning of the year we were living on the fixed margins for the loans, but during 2023 we needed to experience this increase in Euribor. But we see that the future perspective for the Euribor is to go down, and also we have been able to change our financiers or the banks in the end of the year. One bank and contract our existing bank ECB with a better rates than before. So we see that our position is strong, and the base is good for the future investments and the growth.
Yep. So let's go next in each of the segments a bit more in detail. So let's start with fuel sales. Here you can see one of the projects which we worked on 23. So application which you can use in your mobile, and you can pay by not entering the shop. So this is one of the products which we worked on, and the result is quite good, because we already see that around 60,000 of our customers have been downloaded this application, and many of them are also using it. So let's maybe go next in couple of let's say market specific things which are happening. So one thing is obviously that we see that the economy in Latvia and also in other Baltic countries and overall in the region is struggling. We see that we closed 23 in terms of GDP with minus 0.3% growth, and also in consumption segment, overall country was experiencing minus 2.5% growth. So, which obviously leads that if these macro conditions are not very excellent, it also means that there are some impact on fuel market. And we see that starting from September, actually the year-on-year market, retail market, fuel sales are actually decreasing 23 versus 22, but not for us. For us, it's actually increasing in 23 versus 22 by 10%, while overall market was actually increasing by more than 1% only, which means that we have gained more of the market share. But because overall growth in the market is quite low, it means that the competition among fuel players are very, very aggressive. And we see a lot of marketing activities, including discounts and many promotions, which obviously are giving some negative impact on the margins for this segment. And therefore, and this is a quite challenging environment we have to work at currently. Still, what we can also mention very country specific is that in 23 we had the year where fuel traders were allowed to not to use biofuel mixture, and mostly fuel players did it, because obviously biofuel is costing more. But it has ended in 24, so from January you already have to use this bio for petrol, and from April you will also have to use it for diesel, which obviously will give some push to the prices. And we also see that in let's say some specific local regulations and also international regulations, we see that there could be some additional pressure on fossil fuel price in coming years. As an example, in 27, we will, as a transport segment, not only transport segment, but also the fuel traders, we will need to enter this ETS, which is emission trading system. So it means that each fuel trader will have to buy quotas for providing the market with specific CO2 amounts, which obviously means that these quotas are costing something, which might also make the fossil products more expensive. So this is also one of the arguments why we already, when talking to B2B customers, are trying to tell them that maybe it's time to switch to some alternative fuels rather than diesel, because the coming years might actually experience quite a big price increase. So that's pretty much it.
And now about our winner of 2023, our convenience store. The convenience store has been under three main flags over the 2023. This has been ESG, labor costs, and technology change. In the bottom of it all, we still keep our strategy to grow our sales and to provide the client the best product we can. And during 2023, our shop has also transformed a bit, or let's say added up some direction besides the regular one next to the fuel stations or the fuel products. We have opened our first shop in Tērbatas Street in Riga Center. We have created our own robot, and that's a robot barista that sells coffee in retail center in Spice. And we also provide our VIRŠI coffee in the top shops, in top shop chain in Latvia. This has been sort of diversification, but obviously all three of these projects are quite new to the market, and they still have their sort of testing phase or finding their best fit in the market. But let's go to the core operations. So in respect to the core operations of the shop, this has been another successful year for VIRŠI shops, and our VIRŠI shops have grown in the turnover by 2022 by 0.2% from year to year, whilst the market, including VIRŠI, has grown only by 13.4%. This has been a good year in respect to the margins of the products and the supply chain as such, as our stored products in 2022 faced the quite big challenges in finding the best solution that should fit to our customer, that should fit to ESG requirements, and also would be available in let's say in plannable manner in respect to the pricing and the supplies provided. So in 2023, the base established in 2022 created a strong offer, and we continued to bring gross profits that are increase of 33%. In respect to the workforce and the labor costs, we have a feel that each hour of the labor becomes less accessible because there are less labor hours in the market, and it becomes more and more costly. And the unemployment rate in Latvia are still quite low. It's 6.5% in 2023. Thus, we need to make technology work for us. Thus, we need to revise our business processes, and we need to make it lean to be able to deliver the best quality and the shortest possible and way, and give you the best value for what we can. This has been challenging, but I must admit that the base is strong and the team is working very strong, and we're really thankful for that. And in the next slide, I would say introduce you to our new offer, our new croissants filled with the cream, and I would also like to invite you to our new Tērbatas shop, coffee shop that we already presented in the previous slide. and enjoy our new products. And we are giving you this offer for during the next week. In the 8th of March, it's International Women's Day. So basically, you can please your women that you like over the next week and provide them with our croissants. We invite you to copy this code. We will also provide you the code in the chat section and send you over the email after the presentation. And you can activate it in Terbetas shop in Riga. So welcome.
Yes, and then the final segment, which is obviously energy segment. So it's important to note that this picture is coming also from our launch of electricity product to households, which we did back in September, and which is actually also quite a unique product because you can combine this electricity together with discounts in fuel segment and also discounts in our convenience stores. So, with regards to what has happened over the last year in electricity segment, so what we see is that we have been able to continue a very aggressive, positively aggressive growth. Obviously, this segment is very new, but over around 3 years, it has shown a very, let's say, healthy and strong results. And the growth rate is very significant in terms also of electricity sold to customers. So it's more than 3 times higher than last year. And also we have purchased more than 50% of electricity from by 50% more electricity from our local partners in 23 versus 22. And this cooperation with local electricity partners which are producing the electricity from water, solar, biomass, or biogas. This is currently being very productive, and we are utilizing this cooperation to achieve our goals. Also important that this cooperation is providing our partners with certificates of origin, which is basically those green papers for electricity, which in turn also have value. So we are purchasing those papers from our partners and then realizing them further in wholesale market. And also important to note that we are continuing to increase our base of B2B customers. And which is a very, very nice thing is that in already a few months of launching this offer to households, we can already see that there are several thousand of households which have conducted agreement with us and are already our electricity customers. So this is quite an important also achievement for us, and we see that this trend will continue to increase in coming years and months, of course, as well.
And now about the key financial indicators and about the general financial position we are having at the end of 2023. We must say that this has been another strong growth year. Obviously, net profits has been affected by the financial instrument revaluation or electricity prices in the market. But still, this has been a strong year, and excluding financial instruments, our net profits for the year has been 7.2 million, the same as for 2022. The actual data affects return on equity ratio, but as for the current position, we see that we have established a strong base for the next periods to come to succeed and reach our goals set for the 2026. We see that we have reached a net debt EBITDA ratio at 1.5. That is increased from year 2022, and this is mainly effect from the cash accumulated by the end of 2022 to be able to develop ourselves during 2023. Our new loans over the 2023 has been at very low levels. Actually, we have borrowed first 4 million in the last days of the year. That has been related to our expansion projects that are still as construction in the progress in the end of the year and during this first quarter of the year. But we kept the loan levels low as we still had our resources. We still had our big projects to invest, and the interest rates were high. And during this year, it has been like a top year for the investments, and our investments in total, in respect to the cash flow, has exceeded 17 million. That has been absolute boom if we analyze it back to the previous years. As you see, the ambition in our long-term strategy, we still have a lot of work to do, but we feel that the balance sheet, the current position we own, and the current relationship with the banks is strong enough to be able to succeed and develop over the next years. Okay.
Yeah, so this is it from our side. We once again want to thank each single employee, each of our partners and shareholders for the, in our mind, very strong 23. And we are also looking further to next achievements in future years. So I guess now it's time for questions.
Thank you. Let's continue with those we have received prior to the call, and then at the questions that we have received online. A reminder to all the participants to join the discussion. Please use the Q&A section that you see on the bottom of your screen. Questions can be submitted either anonymously or with your name. First question: how do you see the future of gasoline cars versus electric cars in your business? Is the change to electric cars a threat or an opportunity?
It definitely is an opportunity, the short answer. But with regards to the first part of the question, so let's say most optimistic estimates are showing that by 2030, in Latvian market, there should be around 10% of the transport of light cars using electricity. So currently this ratio is only 0.8. So it's in a way optimistic approach. But even if it happens, we already are working, as we mentioned, in quite a big and strong and powerful charging point network. And we see that already these customers which are already owning electricity car, they are coming into stations, also buying some food and coffee and other products. That's one thing. So it's a good as a cross-sell opportunity. Another one is that the margins which we have in electricity charging are actually somewhat higher than in fuel. So in a way, we don't see it as a threat, but more as an opportunity.
Thank you. VIRŠI operate very low debt to equity. Is it because lack of growth or plans to finance expansion with debt or equity, if any?
Yeah. Well, I'd say these past years have been sort of transition. We had the IPO in 2021 that increased the equity side, and we have been also under quite turbulent obstacles over the past years. Our capex plans has been quite higher than they actually were in the past years, because we needed to analyze month by month where to invest, where not to invest, and how fast to proceed, knowing that nothing is known. Yeah, and right now we are in a quite strong position, as we have still quite big projects ahead of us, and we have still capacity to be able to have more lending in the banks. And right now the current strategy is to take on more loans and have quite high capexes over the next years. Yeah.
Where is the cost of the hedge that you had? The participant thinks you've had a big gain in 2022 and then loss in 2023. Is this excluded from your EBITDA growth analysis?
Yeah, so in the EBITDA, we exclude the financial costs and the income and depreciation, amortization, and the changes in the value of the financial instruments are financial income or costs for the year 2022, 2023. So the effect is in net profit.
Mhm.
And as we already mentioned, the effect is plus 3 million roughly in 22 and minus 2 million in 23. So
plus million.
plus million over 2-year period. And also what Vita mentioned, it's important to understand that the remaining value of this instrument is still positive. It's around 2 million in our balance sheet. So overall, this, let's say, exercise with this instrument is still very positive. It's just that it is fluctuating among the years. And it's if you are not excluding it from core results, you might have a bit tricky picture. But if you exclude it, then everything, I guess, what we also try to show is that everything is quite logical.
Mhm. And a follow-up question on the same topic. Is the company still entering into similar financial instruments, and what has been learned from this experience with benefit of 2020 hindsight, of course?
I guess the amount in which we are entering, it is a much, let's say, smaller one, because what we wanted to do is we wanted to hedge our future next years of electricity volume purchases, and this price which we fixed is still much better than currently in the market. And what are the learnings is that that was a very good step to do back in 21, because then electricity pricing was much lower. So that's definitely a plus. The only minus is that, as we already discussed, that you have these fluctuations, which if you are not, let's say, looking into details in balance sheet, then you might get a bit confused. But overall, there is no, let's say, plan that we will be entering some huge amounts in following years. But again, disclaimer is that you never know. If there is a super attractive deal, what can you do?
Mm-hmm.
There is a question regarding shareholder loyalty. So will shareholder loyalty offer continue this year to test new products?
Yes, the plan is to continue, and we actually have a bit of a focus this year on the data analysis and the customer, let's say, behavior in our shops, and what is the demand, not only in comment side, but actually on the actual purchases. And we will provide the offers based on the data. And the last offer for the shareholders was in November of the last year, and you will continue receiving new products over the next periods as well. And of course, check the code in this presentation.
What are the company's strategic goals related to station development in the Baltic states?
Yeah, very concrete, as we already illustrated. So first step is Lithuanian market, which we plan to open the first station in May, June. And potentially next steps will also follow after opening this first station. But again, we will probably not go into details. There are several scenarios. But Lithuanian market is currently for us a bit more important than Estonian, simply because bigger customer flow is going through Lithuania rather than Estonia, because then they are entering the Europe and so on. And also Lithuanian market pricing for fuel is usually lower than the one in Latvia and Estonia. So the short answer is that Lithuania is, let's say, under development. Estonia is currently not in plans.
Mm-hmm. What dividend amounts to expect this year?
Mm-hmm. Dividend policy remains as in the past year, so it's 20% of consolidated net profits. The information and let's say the offer from the board side is provided in the annual reports, but it's up to shareholders to decide it in the May of this year, and the payout is expected in June.
Thank you. This was also our last question today. The recording of the webinar will soon be available online. Please follow VIRŠI announcements to stay up to date. On behalf of VIRŠI, thank you, everybody. It was a pleasure to be with you today.
Thank you.
Thank you.